Hey everybody, what's going on? It's Randy Wolfe. So there's certain properties that you absolutely do not want to buy because it can absolutely crush your profits or even in some cases cause you to lose a lot of money. So I'm going to be talking about that today. I'm going to go through some of these types of properties that you want to stay away from, particularly going into 2026. And also, too, I'm going to maybe mention a few things that might help you when it comes to figuring out what properties that you would actually want to buy. So some of the biggest things, if you take anything away from this, I just want you to think about things like location, how important that is. Think about, you've probably heard the expression in real estate before: location, 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 right? So many times we talk about that, and when people are looking to buy properties to live in, oftentimes that location, location, location thing comes up. But I want you to think about location. I want you to think about the property design. I want you to think about the economics, the area, all of those things. If you don't nail it, can absolutely crush your cash flow and really trap you in a bad deal. With interest rates where they are right now, it's kind of bad because you literally can get stuck in a deal. You get in there, interest rates are high, and then all of a sudden, after closing costs and everything is over with, you buy this deal, you really can't get out of it without losing money per se. And so it's really important. So some of the things that I want to talk about first and foremost is location. So you really do want to avoid bad locations. What does that even mean when you think about bad locations? Well, the first thing that kind of comes to mind for me typically is, what about in the area? What's the safety situation like? Is it an area where families are able to have children and feel confident and comfortable that their children are going to be safe? Or is it a situation where they're worried that, their children or themselves could be injured? Coffee. And so you want to worry about that, or you want to think about that, I should say, right out the gate. If you yourself go into an area and you don't feel safe in that area, that should tell you something. Now, I will say I have invested in areas with low income rentals before where they were less than desirable. And I think that in some situations, you can do that. Typically you're going to get a lot higher cash flow in those areas because you can buy them for so cheap. But one of the things that I learned, and I tell my students, and I always try to coach people about, is even though on paper that may look better, it may look like, wow, look at how much cash flow I get on this deal. On paper, typically the capex, the repairs, the properties are going to get beat up. They're not going to appreciate as well as some properties in other areas, and so in good areas. And so you have to kind of factor those things in. Another thing you want to avoid when it comes to locations, bad locations, is flood zones. So I had a house that I looked at last year actually, and this property was it looked like a great opportunity, to be honest. The numbers were good. I was kind of getting excited about it. And then I looked, and turns out it was in a flood zone. And so that right away was like, okay, this is going to be problematic because, insurance is going to be an issue. And that's something that we're seeing right now, high cost for everything. 2026 particularly, we're going to continue to see the cost of things like insurance, property taxes, all of those things continue to go up. It's just on the rise. And unfortunately, I'm kind of predicting in 2026, we're going to see rents continue to kind of stagnate, or even in some instances, maybe even get a little bit lower. And there's some economic reasons for that I won't get into in this video, but namely, I think a lot of commercial properties, multifamily properties, I think some of this debt is going to be called due, and people are going to be in these bad situations, and people are going to be able to come in and buy them at a discount, and ultimately, because of all the other parameters going on in the economy, I think rents are going to be compressed, and potentially, I hope they don't go lower, but definitely not rise like we've seen them in the past. So that's one thing you really want to do, is you've got to be critical of the location. All right, next, what about other types of things you should be looking for? So hidden cost, or even I should say restrictions would be a better term to say. So if you buy a historic property, for example, there are many limitations to what you're able to do. Like, you have to maintain a property in a certain way if it's a historic property. I lived in Charleston when I was in college at the Citadel, and in the summers lived there when I was in college. And basically there's certain situations where, like in Charleston, South Carolina, you've got like these trees that sometimes they'll grow over the road, and they'll like these old oak trees. And basically if a tree is a certain age, it can't be cut down. It's like certain laws and rules around that. So that's kind of like an extreme example, but like there are situations with historic properties or these situations in these municipalities where the property, there's certain things you can and cannot do. And that could end up leading to costing you a lot of money if you're limited on what you're able to do. Another thing that I would say too is, especially for new and aspiring investors, which this channel is kind of geared around, is you've got to be careful for condos as well, or HOA properties. You know, you can sometimes get in a condo for pretty inexpensive. It might be in a less desirable area or whatever, and someone's trying to get rid of it. But you have to understand that when you buy a condo, there's a lot of there's regime, HOA, and that is something that can literally just change on the dime. Like they could just decide, yeah, you know what, it's time, we're gonna fix this thing on the property, on the premise, and we're gonna just jack up your regime fees. And all of a sudden that can throw your cash flow out of whack. And so you have to be careful for those types of properties that have hidden type of costs sort of buried into those. Another thing you need to be careful for, and there's a lot of popularity. It's kind of cooled off a little bit, but the last handful of years, there's been some significant popularity in short-term rentals because, let's face it, short-term rentals can be amazing. You can actually end up making substantially more cash flow on short-term rentals than you're able to make on long-term rentals, which is awesome, right? You're like, I think I'm going to do a short-term rental instead of the long-term. I can make, sometimes 2-3x the amount of cash flow. Granted, there's a lot more management that goes on. It's almost like combining real estate investing with a small business because there's so much management. But there are management companies that you can pay that specialize with short-term rentals. But here's the deal. If that short-term rental does not make sense as a long-term rental, and what do I mean by that? I'm saying if it does not cash flow, basically. So if you took that short-term rental and you had it stand on its own principle, its own merit, all right, and you leased it out as a long-term rental, would you be able to cash flow? Ask yourself that question. And if the answer is no, then you are taking a pretty big risk. And I would advise, probably in most cases, depending on where you are in your investment journey, particularly a new or aspiring investor, I would say you probably want to stay away from that. And the reason is because so many municipalities around the country are cracking down on short-term rentals. I don't know, if it's the hospitality industry with hotels lobbying against it or whatever, but tons and tons of places are cracking down. Other things that are going on is you have these, they're very public when it happens, but you have here in South Carolina, we just recently had a situation where there was a big party and people got shot, and it was a short-term rental. And of course there was tons and tons of news about it. And then people talking about how they don't like having these short-term rentals in their neighborhoods and stuff like that. And so you've got HOAs cracking down on it. You've got these neighborhoods that are cracking down on it. And so obviously those are the types of things that you really have to think about. And most new and aspiring investors, honestly, you don't really think about that, right? You're like, this looks like a cool opportunity. Again, on paper, this looks great. But imagine if you got in there, you spent all this money, you furnished it, you did all the things, and then you get in there and bam, the town says, oh, you can't have this anymore. Now what are you going to do? If you try to sell it, guess what? Because of the fact that it can't be a short-term rental, other short-term rental investors are going to be like, well, I don't want that now. And so you got to be aware of that. Another thing that's more obvious, but I will say it, you got to think about design, all right? The design, and think about how desirable a property is. That makes a lot of sense, but you don't want to buy a property where you're going to go in there and it's a totally jacked up design. Like it doesn't flow, like as I think everybody knows, like open floor concepts have been very popular over the years. It used to be houses were more compartmentalized. And if you buy like some of the old houses that I've bought over the years, Like a lot of them are more like compartmentalized, and you have to start removing walls, and you get into structural things and having to get a structural engineer out there and all that, and it just starts to add up on expenses. And so you need to understand, and you need to potentially look at these bad floor designs. If you got a house that's got a bad floor design, a bad layout, it's unattractive, that sort of thing, you can fix cosmetic stuff, and that's not a big deal. But if it's these sort of things and you're a new investor, you got to be careful with that, because the cost can get really, really, really expensive really quickly without you even realizing it, because all of a sudden there's all these things that, these different renovation things that you didn't even think about that come into play. Another one is actually, and this kind of goes back to location, and this is one that I would say is a little bit counterintuitive, but is properties located near schools. This is weird, because you would think, okay, if a property is located near a school, this is a good thing, because people with kids, they like that. Actually, oftentimes, and I mean next to a school, I'm like literally next to a school. I'm not saying in the area of a school, but if it's like right next to a school, traffic is a nightmare, particularly when we're talking about elementary schools and middle schools. High schools, not as bad. It's still a lot of traffic, but particularly like elementary, middle schools where parents are having to drop kids off and all that, it's just a logistical nightmare. And so unless your tenant happens to be a parent that has a kid that age, which guess what? Eventually that kid is not going to be that age. And then they're just stuck with all this chaos. Like, you got to be aware of that. And so if you have right next to schools or right next to, major roads or these issues where traffic is going to be a problem, you need to kind of consider maybe not buying that property unless you're just going to be able to buy this thing at a ridiculously, low amount. Another thing that I think a lot of new investors do is they get caught up in their, like, how do I say this? Like, they start thinking from perspective or from the lens of, I wouldn't, like, if I was going to live here, these are all the things that I would want. Like, if I lived in this area, I would want the nicest house, in this neighborhood, let's say. And a lot of times that's when you're an investor, well, I will say all the time, you need to kind of remove that perspective. The safety thing, I would say yes. If it's somewhere that's unsafe, you got to say, would I live there? It's so unsafe. Probably not. Okay, you got to ask yourself, maybe not a good area. But I'm talking more and less like when you're looking at neighborhoods and stuff like that, buying the absolute most expensive property in the neighborhood is typically a no-no, because what you're looking at is if anything shifted and changed, particularly in housing market, like started to cool off, that is going to be one of the last houses someone would buy in that neighborhood. And plus, when it comes to rental properties, the cash flow situation, your cash flow is really going to be restricted. And so that's something you need to think about. I also would err to say, when it comes to rental properties, not necessarily fix and flips, although I kind of stay away from the luxury on fix and flips. But when it comes to rental properties, luxury properties are typically not going to be the properties that a new or aspiring investor wants to jump in, because basically there is a much smaller percentage of the population that is going to rent a luxury property. And so you're going to run into situations with a lot of vacancy problems. You're going to run into these situations where your cash flow is typically not going to work on a luxury property. It could. I'm not saying it can't, particularly if it's a short-term rental type of thing, which I just talked about some of the challenges with that. But I would be very, very cautious as a new and aspiring investor on luxury properties. I just think it's kind of a bad idea, to be honest. And so those are the types of properties that you really want to avoid. Now, what about the properties, a little bonus here, what about the properties that you should look at? I think obviously you look at areas that are safe. You look at areas where there is demand, particularly there is a supply-demand imbalance. So there's not a lot of properties available in this area, but there's a high demand for the properties. People are trying to move there for jobs, for the schools, those sort of things. Those are always great areas when it comes to rental properties. You also want to look at properties that you can buy at a deep enough discount to where you're getting the adequate amount of cash flow that you need. So you don't for new and aspiring investors, it's a little bit I would advise against buying a property that doesn't have enough cash flow to where it's going to cover capex, vacancies, all those things. You typically want to buy to where you're getting positive cash flow, but in the worst case scenario, and this would be someone maybe who's more advanced, you might buy a property for tax purposes so you can cost seg it, which I talk about that in some other videos, where you're buying it more so for the tax benefit, and maybe it's very minimal cash flow. But typically a new investor, you want to be able to buy a property that's going to have strong cash flow, and you're going to have future appreciation in that area, or historically it's shown consistent appreciation. And those are the main things that you want to look at. Obviously, as I mentioned before, look for properties that have good layouts. That's important. And just again, you got to find the right deals. I think so much of this, when you're investing in real estate, boils down to finding good deals. You got to find the right deals. So that's it for this video. I appreciate you watching as always, and I look forward to catching you on the next one.